Good evening, everyone. Hope you guys are doing well. Let's get it here for another market look ahead. We'll look at what opportunities we have ahead this week, as usual, across indices, Forex, maybe take a peek at some commodities. Not a lot of commodities have my interest as for right now, but we'll go ahead and get into the usual analysis. So with that, if you guys can confirm that you guys can see the Nasdaq daily chart, about to be dollar, and that you guys can hear me all right, and we'll get right into it. Thank you, High Speed. Ahmed, thank you very much. Ahmed, hello, Dylan. Hope you are great. Rip your face off rally last week on NQ. Rode it all the way up. Awesome. Great stuff, Ahmed. Glad to see it. And I see you've been killing it, my man. Keep up the great work there, brother. Anthony, great week ahead again. Looking forward to it, Anthony. Thanks for joining us. Olawale, happy Sunday. Ellen, hello, hello. Rich Carey, good evening. Glad to have you. Chris, good evening. Thank you, sir. Frank, happy Sunday. Tommy, all clear. Thank you, my man. Electron55, thank you, sir. Kingsley, hi, Dylan. I got funded with 500K just by watching your weekly outlooks. Awesome. Glad to hear that, Kingsley. Keep up the great work. You know, I know it's not easy, and you also had to put tremendous effort in on your part to get to that point. So glad to have played a small role in your success, but that's all you. Keep it up. Market Madness, good evening. Christian in the Discord group, Dylan, part of the team now. Awesome, Christian. Glad to have you, brother. Looking forward to getting to work, my man. All right, so let's go and get into this week's analysis. Kingsley, I owe you big time, brother. The pleasure's all mine. Thank you, my man. So as I said, going into the analysis today, we'll get started with dollar, go into bonds. Not a whole lot going on there. Then we'll get into the stock indices. Maybe take a peek at Forex, but not a whole lot going on there either. So look to keep this one short and sweet. Let you guys know where the opportunities lie this week, what we're looking for, and we'll keep it moving. Last week's analysis on indices, dead on. Sell stops, buy stops. I'm assuming that's what you're looking at, Ahmed. Traded into the sell side that we were looking for early in the week. And then after we trade to the sell side, smart money buys sell stops in a buy program, right? Which is what we've been in indices. Not looking to call a top, not looking for shorts. Not that we can't short term, right? Into like a short-term retracement type of thing, but not calling a top or doing any of that. That's a loser's game for the most part. So just sticking with the higher time frame bullish narrative on indices, and that's been paying. I'm glad to see you're able to take advantage of that, Ahmed. Also had eyes on NVIDIA. Absolutely. Yeah, I used NVIDIA for the midweek rally, using that as the catalyst. Yes, sir. Tyler, hello, brother. Glad to have you. Satish, daily SMT with DXY and yields. Yeah, I appreciate you bringing that up, Satish. We'll get into all that good stuff. Great observation. All right, without any further ado, let's go ahead and get into it. I think you guys can hear me all good. Monthly chart, dollar, again, still in a range, right? And the only reason I keep bringing that up is not to keep repeating myself, but to indicate to you guys why we're seeing difficulty across an array of asset classes, right? Dollar is the linchpin of the entire financial system. So if dollar is consolidating, that's going to have reverberations throughout Forex, commodities, indices. All markets are going to be affected because of that. So because we're seeing dollar consolidate at equilibrium, right, from low to high, I've already showed you that several times, and we're at equilibrium. So when markets are consolidating at equilibrium, that is the lowest probability market condition to be trading in. Not to say there's no setups, right? Not to say there's no ability to see forward and call targets, but it's going to be a lot more difficult. So with what I left you guys off with a few weeks ago, we were looking for higher prices in dollar, just into this monthly inefficiency, right? Just calling very low-hanging fruit targets, because if it's consolidating, me calling targets isn't going to make it go anywhere, right? So I have to stay and work with what the algorithm's giving me at the time. So that was just a run into this monthly FVG here, and then we've just been stalling there, continuing the sideways consolidation we've been seeing in dollar. We are not going to stay here for the year 2024. We will leave this range, especially with everything going on in the world. We're going to start seeing dollar move. It's just a matter of when, and what it is that I'm looking for is for a displacement on that daily chart, because once we get displacement on the daily chart, then we're going to start seeing the market moving a lot more. But until then, just have your expectations managed on dollar. All right, so weekly chart. Open traded lower last week, which is what I was giving you guys as a bias, was lower prices using the lower time frame order flow. So we traded down in this weekly inefficiency, but also this breaker here. And then look at where we close, right? Close above the weekly fair value gap here and inside that bullish breaker. So if we're going to remain bullish on dollar, we will rally from here. If we get below that breaker here, then we likely wash out for this inefficiency here. And then we have these relative equal lows on the downside, only if we get through this breaker. But as long as we remain above this breaker and inefficiency here, we're looking for higher prices. But again, the violation of this key level is going to be an indication to me that we're going to be bearish. Just understanding how to read order flow using the PD arrays and price delivery. So that's about it for the weekly chart. Let's drop down to the daily and sort this out. So market traded higher into the buy side here, and then I left you guys off with last week. I didn't like how we traded above that, right? We didn't trade above it and continue displacing, indicating continuation or that the market's going to keep reaching higher. We traded higher and then we immediately pulled back into the range. So what I left you guys off with last Sunday for dollar was lower prices, right? Simply because of the order flow. When we were here last week, at the beginning of the week, yes, the weekly chart and the daily chart is bullish. However, the lower time frame order flow was bearish. So by understanding how to read order flow, you're going to be able to qualify where the market's going to go or whether your bias is even valid or not. So while we are bullish, we're seeing bullish structure on a monthly, weekly, daily, the lower time frame wasn't in agreement with that, which is why I was able to call these relative equal lows to you guys, because the order flow is bearish, right? Trade above a high, reject, volume imbalance, hit that level, sell off, and then we had clean lows there on a 4-hour chart. Market dug into that, and then on Thursday, we repriced into the daily bullish order block. So what's interesting is that dollar's repricing to a respective discount array, while S&P and Nasdaq indices are repricing into a premium array, which is all-time high. So I'll be interesting to see how that relationship across the dollar and indices, how that's the relationship's going to be moving forward, but just something I'm monitoring. So hitting that daily bullish order block, as long as you remain above Thursday's low, I'm bullish, right? Because we trade down into a discount of this range, and then we're seeing displacement higher. So again, as long as you remain above Thursday's low, I'm bullish, and then we have upside targets, swing high here on the upside. If we get below Thursday's low, then we have these equal lows here, this inefficiency, and then these equal lows here, if we get below Thursday's low. So that's how I'm going to be playing dollar going into this week. Something notable is looking at the bodies here. What this blue rectangle is a daily fair value gap, a BISI. And look at the bodies respecting consequent encroachment, right? So wicks coloring outside the lines, but the bodies staying inside that level, indicating to me we're bullish. So as we move forward, I'll be looking for higher prices again, unless that gets invalidated. And I gave you guys what that invalidation was. 4-hour chart, like I said, keep this one short and sweet. I got quite a bit to attend to and get done tonight, so not gonna be on here too long. I'll look to take as many of you guys' questions as I can before we get out of here, though. 4-hour chart. So again, left you guys off with last week the bearish order flow, right? Fair value gap, and I gave you guys a detailed explanation of what that was, so I'm not going to reiterate all that here. But respecting premium arrays, right? Unable to get above premium arrays. So what's that telling me? The market's going lower. So that's what we were able to see. The market was going to reprice into these sell stops here, and then this inefficiency, market's digging down into that. Also daily bullish order block. And then all these two blue lines are here as a monthly volume imbalance. If you go up to the monthly chart, it's just that volume imbalance right there. Dropping back down to the 4-hour chart, hitting that volume imbalance, perfectly hitting the midpoint, right? So whenever I'm reading order flow, I'm looking at how we trade at specific key levels. So we hit the midpoint there, consequent encroachment, aggressive rally higher, and that PD arrays overlap with the daily fair value gap. So we have nested PD arrays. And all nested PD arrays is when we have key levels that are overlapping, right? And that's going to be a very sensitive algorithmic reference point that I'm going to refer to whenever I'm reading order flow. So the fact that we hit that midpoint, hit this key level, aggressively displaced higher, that's telling me we're seeing bullishness and institutional sponsorship come in at this level. So fair value gap here, we negated that and traded higher. So here we have a balanced price range now. So as long as we remain above the balanced price range on the 4-hour chart, we're looking for higher prices. If we get below the balanced price range, which is this range here, make that purple. So where the two inefficiencies overlap, if we get below that balanced price range, then we'll likely work our way into Thursday's low and then the equal lows here. So those are the two scenarios. If we remain above this key level, we're bullish. Below it, we're bearish. So very straightforward analysis on dollar this week. So let's look to confirm this with the bonds, which aren't giving a whole lot of clarity, but we'll still take a look at them regardless. Just not easy market conditions, not easy market conditions. So starting at the monthly chart, we've been calling this market lower for the past few weeks, past month, and we finally repriced into that monthly fair value gap. So nice delivery there, and I want to see how we trade there moving forward on a monthly chart. Not much more to see on this time frame. Traded higher, hit the bearish order block, and then we sold off, giving us that bearish bias for bonds, which is what supports higher prices in dollar. Weekly chart, market trades higher into this premium fair value gap, unable to do what? Sustain a rally inside of it, we break down. This candle here stops perfectly at this candle's opening price. Bearish order block, indicating weakness. That's how I've been able to call this market lower for you guys. And then the target's been the weekly fair value gap. Stopped just short of that last week, but still using that as a target, it's been money. Again, stopping just short of that, that'll be interesting to monitor moving forward. Just not a lot of clean price action, right? Just a lot of back and forth, sloppy delivery in bonds, which is going to affect dollar, which is also going to affect currencies, right? So you want to know why currencies are difficult, why people are going into severe drawdown that are trading currencies, because it's just not a market that's predisposed to move. How do you know that? Look at correlated markets, right? Understanding how to read the bond market, understanding how to read dollar, that's all going to give you insight into what other currency pairs are going to do. So no surprise to us. We haven't really been focused on currencies that much this year at all anyway. And that's a big reason why. All right, so weekly chart, we have an inefficiency here above market price, and then we have this up close candle. So as long as you remain below that, I'll remain bearish. But again, not a whole lot to glean from this type of price action here. And same thing with the daily chart, right? Just sloppy consolidation. Market traded lower below the short-term low, and now we've pulled back into the range. So looking at a daily chart, it's conflicting my weekly and monthly analysis, so it's just really 50-50. Gun to my head, daily chart, we sweep above this swing high. How we trade there determines whether or not we get up into these, right? So not a whole lot to be gleaned from bonds. So we'll go into the yields. So I took our attention to yields, and one thing that I have in mind is I know quite a few guys are new coming to this stream as well. The reason we look at yields whenever we're looking at dollar is because yields are what dollar derives its value from, right? Demand for currencies is a result of the bond market, right? So if the yields are higher, if they're repriced higher, and we have higher interest rates, people naturally want to do what? Seek that yield and hold more dollars, right? So simply put, higher yields, bullish dollar, bearish yields, lower dollar. And we're able to use this to further qualify what we're seeing in dollar. So very straightforward, not doing any type of rocket science here. So market trades higher on a weekly into this inefficiency here, here, and here across respective yields. Showing bullishness, but after taking out previous week's high, we get an aggressive sell-off in the yield. So are yields going lower or higher? I don't know, right? We've called them higher the last 2 weeks, and that's delivered beautifully. But now we're trading up into premium arrays, and it's not showing strength through these levels. So wait for more information on yields. Daily chart, swing high, traded above that, and then aggressive breakdown lower. Same thing here. Swing high, taken out, aggressive breakdown lower. And we see the same thing here. So for yields to remain bearish, which is what I'm leaning towards on this time frame, this high would have to remain intact here. So if the high remains intact, we're likely going to see lower yields. If yeah, like I said, it's not a whole lot going on yields. I was going to give you guys the opposing side, but if we look at it on a weekly chart, just not a whole lot to be gleaned from that. So for indexes, don't have a lot of intermarket confirmation to give you guys using the bond market. But like I said, we'll go back to dollar and just reiterate what I'm looking for. So how we trade at that bullish order block is going to be key, right? So if we displace higher from this key level, this low will remain intact. If we get below that, we're bearish. So just keep everything very straightforward for our dollar analysis moving forward. And outside of that, let's get into indices. So indices, here we have weekly chart for S&P. Again, saying it every Sunday, avoiding calling a top in a market that's trading to all-time highs. So Ahmed, is the SMT between the yield trio significant? Absolutely, yeah. There was SMT here at the lows. So I'll go back to dollar. I just wanted to cover this question while I'm already thinking about it. Higher low formed. Yeah, so at the lows, the SMT was critical, right? Because that's what let me call this market higher to you guys, seeing that 5-year made a lower low, whereas we didn't get that here, right? So SMT is very significant within the proper context. And if you go into a 4-hour chart, I believe this is the SMT you're speaking of here, where the 5-year took out this high and the other ones did not. Lower low, higher low. Yeah. So that's something I'm monitoring in yields and med. Absolutely. And I'll watch that moving forward. So on the bond market, yeah, I'll see if the SMT holds at the highs. Because if the SMT holds at the highs, we're likely going lower. But if we erase that SMT to the upside, then that would be very bullish. So that's what I'm using yields to qualify moving forward. Yeah, great question, Ahmed. All right, so weekly chart for E-mini S&P. So again, we've been looking for higher prices, not looking to short a market that's screaming higher, right? Obviously. So S&P, nice expansion, higher to the upside, just classic open, low, high, close, right? Accumulation, manipulation, distribution. So low of the week formed early in the week, high of the week formed at the end, classic bullish delivery, making the low the second trading day of the week, which was Wednesday, which is like a Tuesday when there's a bank holiday, if you're tracking. Looking for higher prices, again, not going to stand in front of a freight train, right? Looking for higher prices, look on the weekly chart. Nothing in here is telling me we're bearish. When the top is in, it's going to be in. Until that time, I'm not going to be the one trying to call a top every week. All right, daily chart for E-mini S&P. So we had a critical SMT at the lows. So we had equal lows in Nasdaq, which was our target on the downside. S&P did not take out those lows at a time when we expect the low of the week to be made, which is Wednesday. Wasn't it Tuesday? Isn't it always the low of the week is on Tuesday? Yes. But there was what? A bank holiday on Monday, right? So if there's a bank holiday Monday, Tuesday is like Monday in my analysis. And then Wednesday is like Tuesday on a classic week, if that makes sense. So Wednesday, classic low of the week, and then there's equal highs, right? So they take it lower. Key SMT. Here we see NQ. I don't know why this looks all wonky. I think they have settlement on this, whatever. But and then lower low relative on the Nasdaq, right? So key SMT when we're already bullish, indicating the market's going to rip higher into the buy stops here. So just nice repricing into that. And then looking at Friday's trading, trades higher into previous day's high, and then we close near the open. So what we have here now on S&P is interesting. So we have a buy side imbalance, sell side inefficiency here. So what I'll be wanting to look at moving forward is how we trade there. Early in the week, I'll be expecting the market to trade lower, just as we did last week. So similar protocol to what we were looking for last week, which is early in the week, we're looking for the market to drop for sell side, and then price in some type of intermediate term low, and then keep expanding higher. I'll be looking for the same thing this week, again, just staying away from calling a top. So we have this inefficiency here, this BISI. So just like any other inefficiency, we'll let it trade down into it, which is what I'm expecting. So the draw early next week is this inefficiency here. And then with what we look at in order flow, we're going to want to have upper quadrant and midpoint. If it's going to be bullish, it's going to show it from these key levels. So I'm going to monitor order flow at the key levels at this daily fair value gap. Early on in the week, I have a bearish bias. how we trade here is going to tell me whether we're going higher or lower. What does that mean? Do we hit midpoint and displace higher? Or do we just trade into it, displace higher? Or do we trade down through these key levels, disrespect them, and keep expanding on down through key levels that should be support if we're bullish, right? So mentorship group, you guys already know what we're looking for and what I'm saying there. So that's what we're going to be watching moving forward. Yeah, that's about it for the daily chart. All right, so take that level off. So again, key SMT here with the Nasdaq. So while Nasdaq did make a lower low, S&P failed to do so. And then we just got a aggressive repricing into these equal highs. So early on in the week, we took out this short-term high here and we're now pulling back down into the range. So we have this daily inefficiency here, which is what this blue rectangle is highlighting. But we also have all this one-sided rally higher from Wednesday. So this is all BISY, all buy-side imbalance, sell-side inefficient. So not that it needs to trade all the way down to here, but because of this inefficient delivery, it's at least going to want to pull down in this daily fair value gap. And then if it really wants to get animated on the downside, we could see the market trade into a short-term discount. Take off the quadrants, we don't need that. And just into a short-term discount of this range here. So early next week, I'll be looking for the market to trade lower. And then how we trade inside this range is going to tell me what I'm looking for. What do you mean? Well, if we have a range, premium to discount, and it trades into discount, the market should behave a very specific way that's going to tell me it's going higher. If it does not displace higher away from discount valuation, then that's going to tell me the market is not strong, right? So it's just a matter of knowing how to read the markets, how to read order flow, and that's going to tell you everything you need to know. So early on in the week, looking for the market to reprice lower, and then in here, just going to let it show me its hand, right? Are we going to rally? S&P will tell me. Are we going to drop? S&P is going to tell me. It'll be interesting to see if we do start working our way lower. We have a lot of sell side here. And then if we... So lots of sell side to chew into if we turn bearish. But again, I am not going to be the guy that's calling it top every single week. I will not do that. That's not the way I like to trade. So short-term bearish, how we trade here is what I'm going to be looking at moving forward. Last thing, we'll drop into the hourly. Ashley Elkins, do you use settlement on or off on the daily chart? I use both. Both are helpful in my analysis. All right, so hourly chart, just refining this further. We have the equal highs that we traded into. Relative equal highs here, we traded above them, and then we immediately broke down, right? Being unable to sustain the rally above here. So early in the week, we have all these equal lows here, here, and here. So I want to see, well, obviously let's dig down into that, but that from where we're at right now, a current market price, that gives us 2.75 points, right? So 2 points on the hourly chart, right, for the sell side. So not a whole lot to do there, but likely you're going to run into those lows and then want to see acceleration just deeper into this daily fair value gap. And like I said, how we trade there will be influential moving forward. For those of you guys that chart on the CFDs, you're at a huge disadvantage, right? And I'm only telling you that because I want you guys to know what you're looking at and not be lost. Because if you're looking at the CFDs, you have a lot of data points you're missing, right? Case in point right here. So here we have a huge regular trading hours gap, which I use this every day in my trading. We nailed a beautiful short Friday using regular trading hours gap, but it's just something I use every day in my analysis, right? So regular trading hours gap is very important to use. If you're charting CFDs, unfortunately, there's data points that are just flying right over your head. And again, you don't want to be part of the misinformed, right? So make sure you're using futures contracts if you want to be serious about this. Reason being, regular trading hours here. We have a huge gap, right? So huge liquidity void here. So if we start to accelerate on the downside, huge draw on liquidity here. And then again, how we trade there will be important. So huge liquidity void, and we're short-term bearish, so that's going to serve as a likely draw, right? And how we trade there, again, is something I'm going to be watching and monitoring moving forward on indices. All right, moving right along. And Q. Weekly open, low, high, close. Again, classic bullish delivery. Previous week's high here was traded into. Here, after making the low of the week at a key discount array, right? So weekly fair value gap, extending that through. So for those of you guys that are newer here, or you're just not as versed in these concepts, again, we all have to learn and start somewhere. So whenever I'm saying how we traded a key inefficiency, key example right here, right? So we have the weekly fair value gap, leave them bullish, trades down into midpoint, and if it's going to rally, it's going to show me it's going to do it from there, right? So that's what I mean when I'm saying read order flow at key levels. So last week, again, market traded lower into the weekly inefficiency, used that as support, and then traded higher into previous week's high, right? Beautiful delivery. Moving forward on the weekly chart, I'm going to stay away from calling a top. So gun to my head, this next expansion is going to be higher. But again, we have to have that confirmed in the lower time frames. Daily chart for Nasdaq early in the week. If we're bullish, market's going to trade lower, and then we have relative equal lows here, here, and here. So you can't really see the relative equal lows as well on the daily chart. That's going to be much easier seen on like a 4-hour or hourly chart. But if you're bullish, which we were, right? We're looking for higher prices, avoiding calling a top, and then we trade lower early in the week. And I'll show you what those equal lows look like, just so you can see that on the 4-hour chart. So relative equal lows here, right? So we traded down into. So daily chart, we have our daily bullish order block here, last down close candle. It trades into that time and price align, we get the low of week. Wednesday, low of week. After Tuesday, accumulation, manipulation, distribution. So low of week priced in on Wednesday inside the bullish order block, and they leave equal highs. Why is that? Smart money buys, sell stops in a buy program. So trading below relative equal lows, smart money's buying that. And where are they going to redistribute it to? All the buy stops above here, right? Because when the market's selling off, retail traders are chasing that short. And then they're putting the stops above the high here and here. So they're going to drop it lower, sell the idea of a top, right? Get the uninformed traders that are always trying to call a top, call the market reversal. Let them put their buy stops here. They're buying the market in a discount at the bullish order block, accumulating the sell stops, and they redistribute it, right? Rinse and repeat. Market's doing that every single week. So beautiful analysis and delivery last week into the previous week's high. And then we traded above this high and rejected. So this is something that's interesting moving forward that I'm going to be monitoring. On Nasdaq, we have a low, lower low. So this up close candle here is going to be our bullish breaker, right? So we have a breaker overlapping with this daily fair value gap. So what I want to see is how we trade in this key level. If we're going to be bullish, it's going to show me from in here. If we trade down through the breaker, if we trade down through the fair value gap here, then we're bearish. But again, as long as we remain supported inside this daily fair value gap and bullish breaker, we're likely going to see higher prices on Nasdaq moving forward. And this is the key level I'm going to be watching. So early in the week, I'm going to be bearish short term into this daily inefficiency. And then again, just let the market show its hand, right? Let the market tell me what it's going to do from these key levels. All right, nothing much more here. All right, 4-hour chart. It's just a beautiful call last week, wasn't it? For those of you guys that were here, it's amazing. Never gets old, right? Even as long as I've been doing this, doesn't get old. Doesn't get old. So looking at early last week, took your guys' attention to the bearish order block right here, right? This last up close candle. The change in state of delivery. We hit that. We sell off, right? So what's order flow? Bearish. So where did I take your attention to last week? Equal lows here, here, and here, right? So sell side in a sell program when order flows bearish, trades down into the sell stops here, hits the daily bullish order block, smart money buying at time and price when we get that low of the week when we're already expecting it. and trading into the sell stops, right? So smart money buying sell stops, aggressive repricing higher into the highs, right? So exactly what I left you guys with off with last week. Mark's going to trade lower in the week into these sell stops, right? Calling that out very one-sided, easy to see. And then from there, I told you guys we have to see how we trade there, right? What did the market do? Aggressive repricing away from the sell stops and the discount. So what's that telling me? Market's going to redistribute to the buy stops. So just really straightforward analysis last week. Haven't been as active on Telegram and Twitter with analysis as much as I was last year. That's because I've been really focused again with private students and signals and whatnot. So we'll look to get more active there, send you guys analysis. But it hasn't been easy. You know, again, we're not in the easiest times to be trading with everything going on in the world. Indices at all-time highs, and you guys can just read between the lines there. But we will get more active in terms of sending analysis to the public group. Obviously not as extensive as, you know, my private group is getting and as frequent, but like I said, we'll look to do some more, just more of what we did last year for the most part. So for our chart, again, we traded higher into the buy side here and here, relative equal highs, and that's previous week's high, right? So significant buy side liquidity, trade into it, and then we broke down, right? So bodies being unable to close above this high, that's significant. And now we have this daily fair value gap in here. So daily fair value gap, I'll be interested to see how we trade inside this key level, right? If we start melting through it, then that's going to be telling me, again, the market isn't as bullish. But if we find support, reaccumulate at these key levels, and bullish order flow comes in at these key levels, then we'll look at higher prices. All right, so hourly chart. So market slow grind higher into the discount, and then they use the NVIDIA earnings as the smoke screen to do what the market was already going to do, right? Reprice higher, right? The data had no bearing on that. Trades into a discount, reprices buy stops here. Trade into those buy stops on Friday, giving a nice TGIF reversal back into the range setup. So I didn't touch on this too much in the private group. I didn't explain too much the TGIF because there was a lot of other things that I was teaching that Friday. But for the TGIF setup, I'll just touch on this here for you guys. When do markets reverse? When time and price aligns, right? So it's not just price and it's not just time, right? I have no idea how many questions I get. Well, is it going to TGIF today, right? Just because it's Friday does not mean there's going to be a reversal setup, right? The markets are not that easy. There has to be an agreement with time and price. So for those of you guys that watched that lecture that ICT made on TGIF, you have to take notes, right? It's not just, oh, the fair value gap, buy it, right? You guys know, obviously, it's not that simple. You have to know what you're looking for on a higher time frame. You have to have narrative, and things have to come into an alignment. So yes, it's Friday, but we also reached previous week's high, right? So we reached key levels on a Friday. So markets reverse when time and price align, not just time or price. So Friday, market trades into previous week's high. Then we get the breakdown lower, right back into the TGIF range here, 0.2 to 0.3. Just nice delivery there, right? So trading above this high here, previous day's high, previous week's high, rejecting that aggressive breakdown back into the range. Hourly chart, again, aggressive breakdown, and look at how we weren't even able to close, right? So is this a market that's displacing higher, right? That's indicating it wants to keep reaching higher, or did we just sweep the high and reject it, right? We swept it and rejected it. So looking at the range we're trading in from high to low, first target would obviously be this daily fair value gap in here. But if we get animated on the downside, we have huge liquidity void here that the market's likely going to want to reprice down into. So that's going to be my draw early in the week. We're learning this Sunday, huh? So rejecting the premium array here, the previous week's high. So key higher time frame, key level, and then we aggressively break down and shift market structure. So this is a key low here because this low took out stops, right? So this is a more significant pattern here, right? And I say pattern because if I just said, oh, that's 2022 model, you're just looking at a pattern with no context, right? 2022 model is only significant here because we've taken out previous week's high. And then we broke down a kilo. It's not just the pattern I'm looking for. It's the logic around the pattern that cements the understanding and actually makes this effective in your hands. So we took out a key premium array, then we break down through a kilo. Then we trade an hourly fair value gap and it's showing weakness. So as of right now, order flow is bearish. So as long as we remain below this hourly fair value gap here, we shouldn't get above that if we're going to be bearish, right? So it's a matter of being able to qualify these things. So as long as we remain below the hourly fair value gap, we're likely going to dig into this daily fair value gap here, and you can have the upper quadrant, midpoint, lower quadrant. And then again, regular trading hours, we have a large void here, right? So the market's going to want to likely dig down into that. And then how and when we trade here will be significant going into the coming week. And I'm expecting a lot of fireworks this week. We have a lot of news. Almost every day we have high impact news. So it'll make for an exciting week. Yes. So hold on. I'm trying to think what else I have. Yeah. So daily inefficiency, like I said, just let the market show what it's going to do, right? Right now, bearish, showing bearish order flow. And then I gave you guys the key targets on the downside. And then we'll have to see how we trade there, right? So if we start showing support at key levels here and then rallying, then we're bullish, right? But if we just keep melting through these levels here, then, you know, obviously that's telling me something in and of itself. So I'll look to keep you guys updated every step of the way as we move forward this week. But that's going to be the analysis for today. Hope this one was insightful. And I'll go into a few questions now. Roshan, please update us regarding your signal service results. Yeah, I'll have results out at the end of each month. At the end of each month is when we're getting all that put together. Month to month is how you want to measure trading results. Matthew Davis. Ahmed, this is exactly how I planned it. I remember from streams that you mentioned Wednesday low of the week during bank holidays. Great knowledge from you being applied. Appreciate you, Ahmed. Glad it's been helpful, brother. Ashley Elkins, do you use settlement on or off? Yep, I said I use both on the daily chart. Jay, would you be trading Monday, news Tuesday through Friday? Given that we have news, let me pull up my log. Yeah, so we have new home sales at Monday. That should give a little bit of volatility. So maybe we'll see what type of silver bullet setup we have on Monday. But that's going to be covered extensively in the newsletter that we write here at Adora Trading for the week to come. So all the details on the economic calendar, earnings, and earnings, many of you guys learned this week, that's something you want to have on your radar. Looking at Nasdaq after close here at 415, 310-point rally, right? And if you're not looking at the earnings report, well, you know, 300-point repricing in NQ. If you're trading real money, that's not something you want to be caught off guard with, right? So a lot of you guys learned the importance of knowing how to read the economic calendar, one, but also earnings reports, number two. So as always, we cover all that. Everyone here at Adora Trading, always ahead of the curve as usual. So be on the lookout for that. And we cover how we're going to attack all these things going into the new week. Appreciate the shout out, Amit. Never said it was Monday. Roshan, really interested in joining. That's why I'm asking. Yeah, and if you just want to wait till March after we finalize February's results, that's fine as well. You can join at your convenience. That's why I think we have open enrollment. Matthew Davis, for regular trading hours gaps, do you always measure body to body, or do you sometimes measure only the blank space between wicks? Yeah, that's a good question, Matthew. Let's go to we'll stay on a 15-minute. So the actual regular trading hours gap, take this daily fair value gap off. So the actual regular trading hours gap, I don't just want body to body here. So that would be the actual liquidity void, right? So the void is where there's no trading at all. So from this candle's high here to this candle's low, there is no orders in that price range. So that's if I want the liquidity void. I always want to see the actual regular trading hours gap, which is going to be denoted by the close on settlement the previous day and then the open at 9:30. Why? Because it gives me accurate measurements that the algorithm is going to refer to. Look at the midpoint delivery right there. Bam. Hits it like a brick wall. What's that telling me? It's weak. We're going to roll over, right? So I want close to open because that's going to give me the true regular trading hours gap. And then just an example of the precision it gives you, right? And then that was the early draw, right? So we use that as a setup going into Friday. So I actually caught this live with the group. 9:30 we open. What's the first move? Is typically going to be the fake move, right? That's to catch the uninformed traders off sides that are trading. Because look at it from a narrative-based standpoint, right? You have to be able to look at the market like that. Market's been doing what? Going up all week. So at 9:30 they open it on Friday. What's retail Rick thinking? Man, I'm going to miss out on the next 100-point rally higher, right? So at 9:30 they give them that. They take it higher into previous week's high. Now they think they're buying strength. Why? Because they just bought the breakout of the previous week's high. So now the market is really bullish. So they take it above the buy side at 9:30. That's our Judas swing. That's the fake move. And then we have the regular trading hours gap here, a real void that the market's going to want to refer to. And just look at the beautiful delivery there. And then when a market's bearish, it's going to use that gap as resistance. Boom. Boom. Sells off. So hopefully that answers your question, Matthew. So I like the open to the close if I'm referring to the actual settlement gap. If I just want the void, right, like where there's no trading at all, then I'll just get it like wick to wick. And then I would do it like that. So hopefully that answers your question, Matthew. So early on in the week, we'll look for the market to want to draw into this and then see how we trade there, right? Huge void. And that's a strong magnet on price. What do you think of the 4-hour inversion fair value gap in NQ? Not really sure what you're asking there. Yeah, I'm not sure what inversion fair value gap you're referring to. But yeah, I've already covered everything I'm sharing on NQ here. So here being Friday, being time took us out previous week high, being price happened in agreement, giving us time and price alignment. Exactly, right? So the reason we got TGIF is because obviously it's Friday. So time, obviously number one, it's in the name of the setup, but we also have to reach targets, right? It has to make sense for the market to reverse. So because we reach targets, that's when market reversal profile is even considered, when those two factors come into alignment. Thumbed up, hit that like button. Thank you very much. Yeah, please do hit the like button. We have like over 1,000 people watch the videos and only get about 100 something likes. So only a handful of you guys are hitting the like button, getting the value here for the freebie. And we don't even charge, right? All we need is the thumbs up for the support, but it's greatly appreciated. Ahmed, very insightful. Thank you again. Pleasure's all mine, brother. Thanks for joining. Simon, Dylan, if you are looking for an uncorrelated asset, Swissy yen is interesting. 10-year yield spread indicating reversal and COT. I appreciate that, Simon. I'm not much in the Forex game as much as I was before, just because stock indices, just nothing even compares. Nothing even compares. So I'm hard pressed to leave stock indices. It's just nothing delivers as beautiful as this asset class, and I'm very, very happy here. But for Forex traders, some good insight, free game from my man Simon. Appreciate you sharing. Amy, as always, thank you for the great analysis. What's your thoughts on crude oil and RTY? Yeah, go ahead and share what we're looking at on crude. RTY is going to be the same as the other indices, but I will take a look at crude because I did leave you guys off with last week. So the main theme on crude oil has been what, right? It's a dog water market. It's not going anywhere. It's not doing anything. So if you're trying to push real hard in these types of market conditions, you're just asking to take a blowtorch to your account, right? So I told you guys, gun to my head on crude oil, we're going to reprice higher, right? Why? Because we have equal highs and just short term, the order flow is bullish. But what have we really been doing in crude oil? Nothing, right? Sideways. We have sell side, that had my interest, but then we failed to trade lower. So if I keep calling targets in markets that aren't going to move, it's not going to make it move, one, but also it's going to make it look like amateur hour, right? If I'm calling markets that aren't moving, you know, like I said, it just screams amateur hour, because we know when markets aren't going to move or not going to move, right? The market structure here is really bad. And like I said, crude oil is an event-driven market because of how correlated it is to what's going on in the WAR in the war arena. So with everything going on there, crude oil is waiting for the next shoe to drop. And until we get that, it's likely going to stay choppy. So daily chart, perfect example of why it's not a market I'm interested in. Last week, I gave you guys, gun to my head, markets trading higher into the buy side. Here, here, and here. All these equal highs. That was the draw, right? But if the market's not going to move, the market makers aren't really interested in what I'm saying here in my YouTube live stream. Unfortunately, I'm not that cool. So even though I'm calling it higher, I want to see it go higher. If it's just not going to deliver, it's not going to deliver, right? And if you're just trying to push in this type of market condition, you might as well just donate your money to charity instead of the marketplace. So that's why I'm not terribly interested in crude oil, because of all these factors. Once we start getting movement in crude, I'll start sharing, my opinion and be more assertive in what I'm looking for. But again, for right now, I just don't have that clarity. And it's a market that if you try to trade in this type of condition, you're just making trading really difficult, right? Why trade something like this when you can go to an asset class, like stock index futures, right? So just my 2 cents on the matter. You can do with that as you please. Hope that one was insightful for you. Amy Moore, thanks for your question. Sean, did you watch the core content ICT uploaded recently? The charter content? I've not been watching that recently. I've had my hands full. I haven't had time to hang out with my man ICT recently. It's been all business for me, brother. Olawale, thanks for today's session, Dylan. Insightful as always. Thank you very much, sir. Don't forget to smash that like button. Appreciate you, Olawale. Zach, good question. Since ES and NQ have been bullish for 4 months now, do we expect quarterly shift in order flow? So not to say we're not going to have a quarterly shift lower. Eventually, the top's going to be in. But I've been getting that question a lot. And that was something that I was thinking a lot earlier in my career, right? When markets are at all-time highs, I kept trying to do quarterly shifts. But if they're going to reprice it higher, if it's going to keep grinding higher at all-time highs, the market makers don't give a damn about anybody's quarterly shifts or cast forwards, right? So you have to just keep trading the order flow we're seeing, which is higher prices, because quarterly shifts in these types of conditions are out the window, right? Not to say it's not going to happen, but the markets aren't that easy as it was prescribed in core content by ICT, right? So while quarterly shifts are extremely powerful, right? While they're very helpful in determining turning points using time, it's not the be all end all, especially in conditions like this where they can just keep taking it higher. Because according to quarterly shifts, we should have already seen a reversal. But I haven't been relying on that tool as much because of the conditions we're in. So one of the things that experience teaches you, or a good mentor, will be, when do you use certain tools, right? When do you not use certain tools, right? When are certain models going to be more effective, less effective? All those things have to be considered and weighed out. But great question there, Zach. But no, I am not looking for a quarterly shift, because we should have already done that if it was going to stay in that rhythm of time-based delivery. But because we're at all-time highs, all that's out the window, and you just keep trusting buy signals until they price in the top. And that's really how you have to attack all-time highs. Ahmed, love the retail Rick point of view here. Yeah, you have to, right? Because that's what makes what we do effective, right? Because if we're buying early in the week making money, there has to be somebody losing that money. Like I teach my private mentorship group, for there to be a trade, there has to be an opposing viewpoint, right? For me to buy and go long and bet on the market going higher, somebody has to be short betting on the market going lower. So what makes smart money concepts effective? The fact that we're cleaning up dumb money's capital all day long. So you have to be able to understand that retail point of view for there to be a narrative, right? Because if you're just looking at candlesticks without any type of narrative, you're just trading patterns. But if you understand the logic that, how market participants view the market, how they're calling it stop, how they're putting buy stops here, right? Why the market should draw there. All those things are what help paint that narrative as to why the market should do specific things. So I don't bring up the retail point of view to kick sand in their face. They already have a hard enough time. I just share that to help shed light on what makes what we do effective, right? You know, what makes what we do effective, for example, here on the 4-hour chart. You know, when they drop it down below these lows here, what's that? That's strong support, right? We just broke support. This market should drop. That's right. When smart money's buying inside of a daily bullish order block, I'd never sell short here, right? So important to understand from a narrative standpoint. Matthew, so which one do you prefer? It seems try to hard to use both liquidity voids and regular trading hours gap. Yeah, Matthew, with where we're at in development right now in private mentorship, just worry about the regular trading hours gap. Don't overcomplicate it, brother. Just keep it simple and straightforward. Anthony, just liked. Thank you very much, sir. Julian, always happy to watch your analysis every Sunday, Dylan. Thank you. Thank you, Julian. Appreciate you joining us. Thund Up, I just read your question briefly, but I've already shared what I'm looking at in Nasdaq. So if you want to revisit that part of the stream, as always, it'll be recorded. But my expectations are lower prices early in the week for NQ. Cobra, ICT said that he teaches London starts at 2 a.m. on his free lectures, but at 1 a.m. in his mentorship. When do you? So the London European session starts at 2 a.m. Amy Moore, just like, thank you very much. Simon, Germany stock exchanges open at 3 a.m. Cobra, so if you trade futures, yeah, the Frankfurt Open, I think it's called, out in Germany. But yeah, 2 a.m. is when the European session starts, and everything's in New York time, right? So everything on your TradingView, you just want to have that set to New York local time. Every algorithm, every algorithm that runs every single market is going to be based off New York time. So to eliminate all confusion, New York time, 2 a.m. is when London European session starts. Frankfurt opens first 1 hour before London. That's right. TrueFlex FX Futures got some really insightful things in a few minutes. Thanks. Awesome. Glad it was insightful. Chapman, I noticed enrollment is closed for mentorship. Will there be any openings in future months? So as for right now, we don't have any future mentorship planned in terms of live, as I'm doing now with the group that I'm working with. But for those of you guys that want to learn how to do what it is I'm doing, you may have something to look forward to here in the future. Can't say too much on that. We still have to solidify some things. But for those of you guys that do want to learn from me and would be interested in doing that, we may have something available for you guys here in the near future. Sean, so is there a specific model you choose to follow for most of your trades? Yeah, every single one of my trades is a model, and I have numerous weapons at my disposal. Rich, excellent insight as always. Thanks, brother. Looking forward to another great week with Team Adora. Appreciate you, Rich. Take care, brother. Have a lovely rest of your weekend. Ahmed Diaz, that is when the CLS starts taking orders. Yes, sir, exactly. Ricky, Dylan, on news days, do you trade during news or do you wait for storm to clear for entries? Do you wait for trade during the open or do you wait for several bullets? Thanks for the teachings. Yeah, so I do all the above. I enter before news if there's a setup there, because a lot of times news is just a catalyst to reprice into certain objectives. But that's going to be certain news, right? Obviously not entering before CPI, FOMC, you know, nothing ridiculous like that. But any other news, if the market structure's there, I have no problem getting in ahead of time. Typically, trading after news is going to be easier, right? Because you have liquidity and efficiency. You can see where the victims are stacked up and you can just go in and attack. But you can enter before if the market structure is there, though. So you have to know how to read market structure and have everything already be in place. And then the news is just going to be a catalyst to reprice into the objectives. So it's a matter of weighing all that out. And I do wait for silver bullets. It depends. Like I said, it just depends on a lot of different factors. There's times I let the first 30 minutes play out. I just like to see what 9:30 to 10 does. And then I'll wait for silver bullets. Sometimes I'll take a trade before. Again, it all depends on market structure. A lot of different variables there. Jonathan, curious, would a quarterly shift also consist of a quarter being a consolidation quarter rather than a complete drop? Very interesting question, Jonathan. So yeah, markets can consolidate for an extended period of time. Typically not for an entire quarter though. So, I mean, markets can consolidate upwards of a couple months. And if we go to dollar, go to a 3-month chart, we've just had proven to us that markets can actually consolidate for over a year. So looking at, obviously, in the lower time frames, you can validate quarterly shifts, and then there's, better structure in there. But yeah, markets can consolidate for extended periods of time. But for an entire quarterly shift, that's extremely rare. There are cases that's happened, but markets typically just go into consolidation for a month, maybe two at most. But that's a possibility, Jonathan. It's a matter of just weighing all those things out. But the good thing is, with the tools we have, we know when markets are leaving consolidation. We know when they're entering consolidation. We know what to wait for. So if and when those conditions manifest, then we'll just have to use the appropriate tools to know how to move forward with what the price action's given us. Yeah, brother. Great question. Derek, hey Dylan, great insight as always. I'm a huge fan, all the way from the other side of the world, Kenya. Awesome, Derek. Shout out to Kenya. Get much love on the stream from our Kenya group. So appreciate you joining, brother. Jay, hey, when did you start trading with NQ? I just feel like as of right now, in order to build some consistency and following rules in the beginning, I'm more comfortable with ES with respect to price action. So I started in ES. I traded them both though, but now I'm more focused in NQ just because the ranges are a lot bigger and it's just a faster market, and I prefer that. But they're both phenomenal asset classes, so you cannot go wrong with either of them. I like ES a lot. Sean, from modules 1 to 12, which one is your favorite? Not sure what you're talking about there. I believe core content, maybe, if I'm tracking. And if it's core content, then all 12 months. There isn't just 1 month that's gonna do it for you. You have to be able to study everything, especially with the way ICT set up his education. And hey, I'm not knocking him. This information would have never reached the public hadn't ICT been inspired to do it. So I never hate on the way he structured his teachings, but the way he set them up is to where the most straightforward is mentorship 2022, right? Get a model, hit the ground running 2022. But if you want to learn how to read price action at an advanced level, you have to go through everything that man has done. Core content, 2023 mentorship, 2022, the free lectures, all those different things you have to go through, because he's put the information in such a just disjointed way that he makes it to where you have to work your ass off. I mean, even a lot of the best insights that he gave for the 2023 mentorship were actually tucked in the 4-hour Twitter spaces he'd do every week, right? So he only made it for the strong. If you're willing to submit to all that, then I think ICT is a great person to learn from. He's very invested, knows what he's talking about, of course, but definitely gonna have to work for it. But so I say all that to say that's why I can't just tell you 1 month, right? You have to go through all of it, and there's just no other way around learning from ICT other than doing that. He means the charter models, price action models. Yeah, so model 6 and 7 is really good because they're basically market maker models. So those are more universal models. So I just think of, having to explain what I mean there. So I'm not even going to get into all that. So, but I like those models because they're flexible, right? You can do a lot with market maker models. Private mentorship, I think he's referring to. Yeah, I'm not. Yeah, so prime model 6 and 7. The simplest model would be the 2022 model that he made. Sean, do you think as more and more people start using ICT, they will try manipulating it and the modules no longer works? No, absolutely not. That's a good question, Sean. That's something you get all the time, but no, it's never going to stop working. The market runs off liquidity. Liquidity is the lifeblood of the marketplace, and that's always going to remain a market truism. Unless money stops driving this world, the markets are going to change. But money's always going to make the world go round. So as long as fear and greed changes, which isn't anytime soon, you don't have to worry about the algorithm changing. All right, so that's going to be it. See the questions starting to slow down. Let me check Discord group, just make sure I don't got any questions tucked in there. All right, guys, that's going to be it for me today. Hope this one was insightful. Have a lovely rest of your weekend, everyone. And as always, we'll keep you updated with what we're seeing. Until the next live stream, which we'll see if we do one this week. We'll see if get to the bag early this week, and then we'll look to maybe hang out on a YouTube live stream, do some tape reading. But we'll see. I have to see what my schedule's looking like, and I'll update you guys there. But until then, I think that's everything. Have a lovely rest of your weekend, guys. Good luck and good trading. Take care, everyone.